Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, I'm going to explain you all the entire module 1 under the subject Auditing 1. A complete revision and explanation of the entire module will be considered in this particular video. Now remember, in module 1 there are 3 chapters basically: introduction, types of errors and fraud, and types of audit. So let us see what are the most important topics, how you need to study them in the most simplest manner. We'll try to cover up the entire module in this particular video. So let us start. Once we'll just go through the first module. In our last lecture, I guess we had completed with the first part of the topic, that was the introduction. Just confirm it once if the first part of the chapter was done. Okay, everyone just confirm it. I guess we had completed the first part, that is introduction, where we started off with origin, then the definition, the features, objective, principle, then the true and fake concept, window dressing, secret reserve, advantages, limitation, and the various qualities of auditing. Okay, and thereafter, I guess we had taken up some MCQs and true and fair view. Okay, true and false were taken later on. So we had completed with the first chapter. Today we are going to start with the second and hopefully the third. Under second we have types of errors and fraud, and the responsibility towards errors and fraud. Okay. First, we are going to start with what are the types of errors. First of all, can anyone tell me what do you mean by errors? Okay, do let me know what is the meaning of error.
Any mistake committed unknowingly.
Okay, yes. Unintentionally, if you are doing, if you have committed any mistake, then we call it as an error. It is unintentional. Okay, it has happened by mistakenly. So anything which is done by mistakenly, we call it as an error. Perfect. So an error is an unintentional mistake which result in misstatement of books of account. So anything which is done unintentionally, okay, without knowingly, and which causes your books of account not errors. Okay, that is called as errors. Now there are various types. Okay, now there are various types of errors which we have to go through. Okay, the chart for the various types of errors has been shown. Okay, errors, basically there are two types of errors. One is errors of principle and the other one is the clerical error. Under principle, that's the sole error. Under clerical error, we have further subdivision of errors. We have error of omission, compensating error, error of duplication, and error of commission. Okay, you all must have gone through these errors early on when you all had the lectures. Okay, so we'll be taking up now one by one error. Okay, we'll be trying understanding what does it mean, and after completing the types of errors, I have created one exercise whereby transaction, and you all have to state what kind of errors uh, are those transactions consisting of. Okay, one of you all have mentioned whether we'll get a PDF for all this. Yeah, I'll give you the notes. I'll be making the notes and I'll be providing the notes of the lecture, whatever we have done in the lecture. I'll be providing you all the notes. Okay, so that's not an issue. But the notes which I'll be providing will be little different from the PPT. Okay, because there you'll have to short notes are there. You have to write answer wise. So the notes will have a bit different explanation as per the PPT. Okay, but almost similar. Okay, so you don't have to worry, you all will be getting your notes. Okay, I guess Emmanuel, you had mentioned, so you all will get the notes, so not an issue with that. I'll be uploading that in a day or two in on the portal. Once this entire module gets over, I'll be posting the notes. Okay, so not an issue with that. Chalo. So we'll start with one by one. The very first error is called error of principles. Can anyone tell me what do you mean by error of principle? Hey, first of all, this topic was done, right? prior to this lecture? Hello, this particular topic was completed before. I mean, was taken up before. Yeah, okay. So it was taken up. Okay, cool. So now tell me, error of principle. Okay, Emmanuel mentioned error of principle of accounting. Yeah, yeah. All these are accounting errors only. But what do you mean by it? In simple term, if anyone can tell me, what do you mean by error of principle?
So, is it like when you're recording a transaction and you don't follow the principles of accounting, it is termed as an error then?
Acha, ठीक. What you said is good. So at least can anyone tell me? Can anyone give me an example of a principle of error? A principle of accounting. Can anyone give me an example of principle of accounting? Any example of any principle which you all know of accounting?
So, the basic principles debit what comes in, credit what goes out.
Okay, that you can say that is one of the principle. Other than that, there were few principles like first of all, closing stock. A principle related to closing stock. If anyone remembers that, there is one principle relating to closing stock. Mehak has also given an answer, and Mehak, that answer is also perfect, like what you mentioned. Mehak mentioned that accounting mistake where an entry is violated. Okay, so yes, that also can be one. Does anyone remember a principle of accounting related to closing stock? Any rule relating to closing stock? There is one basic rule which everyone has to remember while posting the closing stock.
So the second effect of closing stock, the asset side and the trading account, but the towards the credit side.
ठीक है, those are two effects. नहीं नहीं, my question was, there is one rule to post a closing stock now. There is one rule. अच्छा चल, I'll give you an example. Let's say closing stock cost price is 40,000 and market price is 35,000. Which closing stock will you record? Yeah, just note down. Closing stock cost price is 40,000 and market price is 35,000. Which closing stock will you record?
Whichever is lower.
Exactly. That those are called principle. Closing stock has to be valued at cost or market price, whichever is lower. So that's the principle. If that particular rule has not been followed, then we'll call it as error of principle, stating that he didn't knew the rule. Okay. See, it is an error, it's not a fraud. So because he didn't knew the rules, so he posted 40,000. So that's an error of principle. Okay. So that was one of the examples. Okay. So error of principle occur when any of the generally accepted accounting principles are violated. Such error does not affect the trial balance. Trial balance does not get affected with error of principle. Okay, and those are basically all your generally accepted rules. So whatever rules are available, like debit what comes in, credit goes out, as well, one of them mentioned. Okay, so those are your generally accepted rules. If you don't follow those rules or you forgot those rules, so that is known as error of principle. Clear, everyone?
Yes, sir.
I'll move ahead now. This was the first type of error. Now we jump to clerical error. Now, clerical error, the word clerical itself means it has something to do with, clerical job, which is posting, recording, okay, something related to that. So, clerical errors are basically human errors, which are committed in the process of recording financial transaction. They are all human errors. Okay, human have a tendency to make errors. So because any human activity, if they have committed some errors, we call it as clerical errors. Now under clerical error, there are subdivision. The very first clerical error which is available is error of omission. Can anyone tell me what do you mean by omission? Very simple. It's a simple word. What do you mean by omission?
Omitted.
Okay, yeah, like particular entry has not been recorded basically. Okay, you forgot to write. Now, omission can be in two parts. It can be complete omission as well as partial omission. Okay. So, error committed by not recording transaction in the books of account is called error of omission. Such omission can be complete or partial. Can anyone give me example of complete omission as well as partial omission? Think from the point of view of final accounts. Okay, you all are solving final accounts, and according to that, tell me what error. How can you get an error of complete omission, and how can you commit an error of partial omission?
One aspect is recorded and another is omitted is partial omission.
Okay, like one effect has been recorded. Okay, you mean to say yes. If under adjustment, we have to every adjustment have two effects. So if one effect is recorded and the other one is not, we call it as partial omission. And complete omission, what do you mean by complete omission?
Both effects are not recorded.
Yeah, where the entire adjustment has not been recorded. Now the question is, under which case the final account will not tally? Under complete omission or partial omission?
Partial.
Yes. Under partial omission, your final account won't tally. But under complete omission, it will tally because both the effects are getting nullified. Okay, perfect. So under complete omission, when a transaction is not recorded at all in the books of account, then it is a case of complete omission. Such omission does not affect the trial balance. Okay, so it won't affect your final accounts either. But partial omission, when a transaction is recorded only partially, then it is partial omission. Such error will affect your trial balance. Did everyone get this point? Error of omission, it was a simple error. Did everyone get this?
Yes, sir.
Okay, chalo, then I move ahead to the next error. Compensating error. Can anyone tell me what do you mean by compensating error? Agar if you all know, if you all get, what does it mean? Give it a try. If you all have come across this before while reading or something, if you all can give it a try, or can give me an example. If you're not able to explain at least by an example, what is compensating error? Anyone? Compensating error? Okay, Siddharth, y'all can write the answers freely also. Okay, you don't need to message. Y'all can even write it in the group. It doesn't make a difference. Okay. Siddharth has mentioned this is a type of error where the error is compensated by other. So trial balance not okay. So see what he said. Siddharth has mentioned that it is a type of error which is compensated by another. Okay. So what he meant was exactly to the point, when two or more errors are committed in such a way that the effect of one error is cancelled or nullified by the other, then such errors are called compensating errors. In short, one error cancels the effects of another error and they do not affect the trial balance. So whatever Siddharth mentioned was perfect. Now I'll give you an example for this. Okay, let's say we are taking trading account. Okay, we are taking trading account. Now in trading account, we have purchases and we have sales. Let's say by mistakenly I wasn't able to record 5,000 rupees ka sales. Okay, there was a sale of 5,000 which was unrecorded. I forgot to record it. Now I made an error there. I made an error. I recorded 5,000 rupees less. I got a GP amount. But I got the GP by not adding this 5,000 rupees ka sales. Now, in order to compensate this one error, I'll make another error. I will reduce purchases also 5,000 sales. I won't post 5,000 ka purchase also. So in that case, 5,000 of sale and 5,000 of purchase will get nullified by itself. I forgot to put 5,000 sales, so I didn't even put 5,000 ka purchase. Both are error, but one error nullifies the other error ka effect. That is called as compensating error. Did everyone get that example? Hello, did everyone get that example? Or did everyone understand this compensating error? Quick,
Yes, sir.
be a bit more interactive. Then it will become, enjoyable to understand the lecture also. Okay, cool, perfect. This was compensating error. The next type we have error of duplication. Now, tell me this in simple word. Now, this is a simple, error. What do you mean by error or duplication? Or give me an example. Give me an example of error or duplication.
So when you enter the same transaction twice.
Perfect. Example. Can you give me one example? Make your own example and give me one.
So maybe if there is a purchase of 10,000 and by
Yes.
mistake you do the same entry of 10,000 twice, so it becomes 20,000.
Perfect. Perfect. That's an error or duplication. Darren has also mentioned entering the transactions twice. Okay. Same thing if you're repeating twice. Okay. Like there was outstanding wages. So you wrote outstanding wages, then you added two wages and alag se also you wrote outstanding wages. So that becomes duplication of error. Perfect. Such errors arise when an entry is recorded twice in the books of account. Such errors do not affect the trial balance because both the debit and credit effects correctly. They are passed correctly, but the thing is you have just doubled the amount. Okay, you put it double. So that was error of duplication. That was the third type of clerical error. The fourth one, the last type of error, we have error of commission. Now, error of commission has many, they have further subtypes of errors. So first, we'll just see what do you mean by error of commission. So the error which are committed while posting a transaction, okay, then they are known as error of commission. The error of commission is relating to posting errors. Now, under posting errors, we have three types of errors. One is casting, posting error, and adding error. So now let us try to understand what does each mean. First is casting error. Can anyone tell me what do you mean by the word casting? Anyone? Casting. What do you mean by the word casting? Yes, Arya has mentioned it means totaling. Yes, exactly. So while totaling your trial balance, while totaling your accounts, if you make an error, that error will be considered as casting errors. Perfectly said. Okay. So casting errors are committed while taking the total of carry forward balancing in a day book or a ledger account. Okay. Such error affect the trial balance. So casting errors are committed while taking the total. Okay, it is related to totaling. So taking the balance forward or totaling, if you make any mistake, that particular mistake will be considered as casting errors. Can anyone give me an example of casting errors? How can you make casting error? Can anyone give me an example? How can casting error take place? Is my voice audible? Hello, is my voice audible to all?
Yes, sir.
Yes, sir.
Yes, sir.
So then tell me na what. Give me an example na then. Ki casting error. See, you all only told me casting error mean error of totaling. So give me an example. How can totaling error incur? How can you incur that? Just a small example.
So net profit.
Your voice got cracked.
So
I
net
guess it was.
profit.
I guess it was Darren, if I'm not wrong. I don't know. Someone's again the voice. I only heard net profit. After that, the voice got cracked again. Acha, chalo, I guess he meant to say that net profit. Okay, let's say if the net profit is, or we'll consider gross profit. Okay, let's say the gross profit was 50,000. When while transferring it to PNL account, 50,000 by mistakenly zero got cut and you wrote 5,000. Same totaling error. It was 100 by mistakenly you put 10 extra. That became 1,000 again casting error. Okay, those are the two small examples that were casting errors. After casting error comes the posting error. Okay, after casting error comes posting error. Now, very simple. What do you mean by posting error? Posting errors may occur by way of. Now, posting may there are three different type of posting error. First, posting the wrong amount. In your question, it was salary 50,000. You wrote it as 5 lakhs. Posting of wrong amount. Posting to the wrong side of the account. It was supposed to be on the debit side. You posted on the credit side. Account posting to the wrong account. It was sale. You by mistakenly wrote it in purchase. So these were the three types of posting. Okay, I get this point. Posting error. One is posting of wrong amount, wrong side of the account, and totally wrong account. Okay. Did everyone get that point?
Yes,
Yes,
sir.
sir.
Okay. Now one last error which we have is recording error. When we talk about recording, we mean by in simple terms we mean by recording the journal entry. Okay. Recording error, the error which are neither casting, posting, recording error. These are basic errors in passing accounting entries, that is journal entry. If I ask you, paid salary rupee 5,000, what will be the journal entry for it? Paid salary 1,000, what will be the journal entry?
Salary account debit to cash account credit.
Perfect. Salary to cash. This is your correct entry. By mistakenly, if you write cash to salary, then that is your recording error. Okay. I hope everyone are awake now. This is an afternoon time. Okay. I guess everyone should be awake now. Okay. So the entry, if you pass a wrong journal entry, then we call it as a recording error. Okay. Now, so with this, these were the various types of errors which were there and which can be committed by mistakenly. Okay. Now, identify the types of errors on your notebook. Okay, open your notebook, note down the transaction, note down this transaction, and in front of your transaction, note down what type of error was committed in it. Okay, so I'll give you a couple of minutes. Note down the transaction first, then note down the type of errors. Later on, we'll discuss what is the answers for these transactions. So if everyone see that, all of you will note down the transactions and try to identify what type of error has been committed. Okay, how many of you have finished noting all the answers? How many of you have finished? Hello? Okay, Danika has done. Others, all of you are alive, I feel. Okay, great. I'm getting the answers to get done. Yes, yes, yes. Okay, now tell me. We will discuss the answers then one by one. First, treating revenue expense as capital expenditure. What kind of error was committed here? Let me know what type of error. So post in the chat what error do you think you all, what answer you all wrote, note it down in the chat box. So then we'll discuss whether we'll see how many of you all got the answer right.
So is it error of principle?
Yeah, is it? Nahi. Put in the chat box. उसमें लिखो. Then we'll with how many of you all have got the right answer. Okay. The first error, the answer for the first one was error of principle. Revenue expense written as capital expense. It is error of principle. Now let us see how many of you all have got that right. Posting error, no, it was not posting error. So first answer was error of principle. Okay, many of you have got it right. A few of them have written as posting errors. No, posting. See, revenue expense consider capital expense. Expense is considered an expense only. But both are on the debit side only. But the principle was ignored here. Revenue is P&L. Capital was supposed to be an asset. Okay, so that has been mistaken there. So the first error is error of principle. Perfect. Chalo next. Sale transaction not recorded at all. Yes, it is error of omission and it is complete error of omission. Perfect, perfect, perfect. Everyone have got this one right. Amazing. Chalo, next. Totals of sale book calculated as rupees 1000 instead of 900. Tell me what kind of error is this? Okay, okay. Three of you all have written casting. Sarona has written posting. The actual answer for this is supposed to be it is a casting error. Okay, totaling error. It was supposed to be 900 by mistakenly you wrote it as you calculated. See, it is not posting. They said calculated. So your totaling is gone wrong. Okay, so that is your casting error. Yes, perfect. Next, reimbursement of expense of the company driver Mr. Ramesh, rupees 625 booked twice. Exactly, it is error of duplication. Okay, double twice it was written. Yes, it is error of duplication. Perfectly noted down. And the last one, over or under charging of depreciation. Over or under charging of depreciation. Okay, one of you all mentioned it's error of principle. Others. For the last one, the correct answer is supposed to be error of principle. Okay, overcharging and undercharging or depreciation. Okay, it is error of principle. Okay, it is not casting. Totaling nahi hai. You are just overcharged or undercharged it. Okay, Like if it's supposed to be 10%, you are taking it as, you either took it at a higher rate or at a lower rate. So your principle, your basic rule has been mistaken there. So it is error of principle. How many of you got all five right? If, mm, is Sonali available? What? Is she there for the lecture? Okay, I can't see. Okay, Rishabh says he has got five right. Great. Anyone five or four? 4 to 5 right. Okay, Salah has got all five right. That's great. 4, 5, 4, 5. Chalo, that's great. That it means that the concept has been, cleared. Chalo, that is first part. There is a one more. There is one more exercise. Chalo, now note down these transactions. Note down these transactions. This is a one last, exercise under errors. Then we'll be jumping to the next part. That is frauds. Okay. So note down this transaction and again quickly note down what type of errors they are, and then we'll again discuss the answers. Has everyone completed? Yes or no? Okay, great. Then chalo, we'll discuss the answers then. The first answer, the first question, I mean, posting rupees 1000 instead of rupees 100. Okay, we have posting, recording, others, posting, again posting. Okay. Okay, let us check the answer. The actual answer was supposed to be it is a posting error. Okay, now look here. See, there are two different transactions. One was while calculating, you took 1000 instead of 900. That is called calculating. Okay, that was casting error. Here it is clearly mentioned while posting, while noting it down, you wrote it 1000 instead of 100. Okay, I mean the casting errors means by totaling or by calculating. If you use the word calculating where you made a mistake, it is called casting error. By posting you made a mistake, then it is a posting error. Okay. Next, ignoring prepaid outstanding expenses. Second one, ignoring prepaid outstanding expenses. The answer is okay. Now in this you can have both the answers. Okay, you can note both the answers. Here it can be error of principle as well as complete omission. Okay, both the answers would have been perfectly okay. Both would have been right. It is error of principle as well as omission. Okay, that was the complete omission. Perfect. Both the answers would be considered right. The next, goods sold to a customer recorded only in sales book and omitted to be recorded in the party's ledger. Yes, yes. Okay, both two of you have given as the answer as omission, partial omission to be precise. And yes, it is error of partial omission. Perfect, 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 perfect. Second last, recording a sale transaction as a purchase transaction. Okay, Danica said posting, recording, principle, posting. The correct answer for this would have been recording error. The journal entry has been written wrong. Okay, it was a sales transaction. The entry would have supposed to be sales. Person to sales has to be recognized as purchase transaction. So it is recording transaction or recording error. Those who written as recording perfectly written. Last, posting on debit side instead of credit side. Okay, now that is simple because already written as posting error. Is written as posting. So yes, it is posting error. Amazing, amazing, great. Yeah, everyone have got that done. So now, can we say your types of error? The concept is completely clear now. Yes or no?
Yes, 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 sir. sir.
Perfect, perfect. Then we move ahead. Okay, great. So this one more concept is over of us. Now we jump to our next types of types of fraud or fraud. Okay. Now first of all, tell me what do you mean by fraud? Tell me what do you mean by fraud? It is a deliberate mistake, yes, an intentional mistake. Okay, so we can say it is exactly opposite of error. See, I guess Darren had mentioned under error he said it is unintentional error, unintentional mistake which you make. Okay, whereas fraud is an intentional mistake. Okay, exactly. It is a criminal deception. Yes, it is done something which is intentionally done to outperform your put an ill effect on the opposite party. Exact. So we can summarize all your meaning, whatever. Yes, it is an illegal advantage to be taken. Yes. Fraud means intentional or deliberate misrepresentation of financial information by management or any employee or any third party with an objective to cheat others and or make illegal gains. So all the points which all I mentioned, deliberate, intentional, criminal, illegal, all that comes under the same heading. Okay. So anything which is it is intentional, it is deliberate, okay, to cheat others illegally, all that comes under the same picture, under the one word, that is fraud. Perfect. Perfectly said. Now, under fraud, again, we have different types of fraud. Okay, broadly speaking, we have two types of fraud. One, we have manipulation or alteration, and the other one is misappropriation. Okay, again, you all must have gone through in the previously, under the lecture based on fraud. So we'll again, try to understand one by one. After explanation, again, I have made one small, just a small couple of transactions to identify. So we'll start one by one. First is manipulation. or alteration. Okay, again, manipulation or alteration meaning changing, making some changes in your accounting statement. Now this is intentionally made. Okay, when you intentionally make changes in your accounting statement, then we call it as manipulation or alteration to the books of account. Under that, we have first deliberate omission. Deliberate omission matlab not by mistakenly. You are trying to omit something which is deliberately done. You yourself are trying to omit that particular transaction. For example, let's say, let us take an example of, McDonald's. Everyone are aware about McDonald's. So let us say you are working on the counter where you're the receipt, the person who's making the receipt or taking the sales order. So you are a person who are taking the sales order. Now someone comes to you, a customer comes to you and he asks for an order. Okay, now you give him and you give him an opportunity or you give him an offer. You tell that person, or let rather than McDonald's, take the example of Domino's. Okay, you are under sales. Okay, you are the one who are going to take the order. There is this one customer who comes to you and he gives you an order. Let's say you want couple of pizzas which is costing, let's say, total of 2000. The bill is coming to 2000. Now you, from the point of view of making a fraud, you tell that customer, sir, is it okay if I don't give you a bill? Is it okay if I don't give you a bill? And your cost of your 2000, I will make it to 1000. You get a full order, but you'll only have to pay 1000. But the condition is that you don't take the bill. In a normal scenario, will you accept that order? Will you accept that offer? Let me know. Will you accept that offer? So you went, let's say your birthday is there or something, you're giving treat to your friend. Okay, you went to the pizza, you ordered it, the bill is coming to 2000. At the counter, the person is telling, don't take the bill and I'll make the, your total cost to 1000 rupees. Will you accept it in the normal scenario? Yes or no? Okay, Arya says no. Others? Okay, Jennifer will say no. Why won't you take the bill? Why wouldn't? Let me make it more prominent. Like the product, the order what you gave were perfect. They gave you the pizza which was perfectly made. Okay, everything is made perfectly. Okay, the way you wanted, exactly you got it, but you get it at a half the rate. Why will you not still go for that offer? Why will you not go? If I would be a rational person, I would have gone for that offer. Rather than paying 2000, I just have to pay 1000. I get my complete order. I get a complete. I would have paid 1000 and I would have said, okay, give me my full order, but I'll only pay half the amount. If I would be a rational person, I would have gone for that. Okay, because I just have to pay half the amount and I don't need the bill because the product which I wanted, I got that perfectly. And it is not that written policy or something. The moment I eat is over. Okay, I'm not going to get a refund for that or anything later on. Okay, there's no warranty, no guarantee on that. Okay, so as a rational person, let's say I would have said, okay, don't give me the bill, give me my product and for 1000 rupees. Now, in that case, the person sitting at the counter, okay, yeah, it is corruption, but it's okay. Okay, explaining that only. I'm explaining you the reason on fraud. Fraud is not legal, right? Corrupted only. Only then you make fraud. Okay, only then you make fraud. Okay, so let's say the seller said, okay, he gave you the product, you gave him 1000. Now he hasn't made any bill. If he hasn't made any bill, okay, there is no transaction. Okay, if there is no bill, there is no transaction. So this 1000 rupees will directly go into his pocket. Okay, in that case, he has deliberately omitted a sales transaction. The moment he has done it deliberately, it will be considered as manipulation, and which is indirectly considered as a fraud. Okay, so that was the example for fraud. So a transaction may not be recorded at all in the books of account, but which is done deliberately. Okay, that was one of the examples of fraud or deliberate omission. Did everyone get that example and the meaning of deliberate omission?
Yes, sir.
Yes, sir.
Perfect. So next we have recording under manipulation only. Under manipulation, we have the next point: recording of bogus transaction. Recording of bogus transaction. Can anyone give me an example? What do you mean by that? What do you mean by bogus transactions? Can anyone try? Just give it a try. Now see, I don't want you all to be a perfect answer or something. At least you all can give it a try what it means.
So doesn't bogus mean like a dummy?
Exactly, simple. That is the exact answer. Yes, it is dummy, fake transaction, not a true transaction. Perfect. So if I want to pass a fake transaction, okay, which hasn't taken place, okay, that transaction is called as bogus transaction. For example, if I show good amount of, see, let's say in this current year, the company has earned huge profit. The moment we earn huge profit, we have to pay dividend, more tax. I don't want to pay more tax. I don't want to pay more dividend. I start passing fake or dummy transaction, dummy purchases, dummy salary, okay, bogus printing and stationery expense, bogus depreciation. In that case, what will happen? My net profit will reduce, eventually lesser tax and lesser dividend to be paid. Okay. So dummy or bogus transaction may be recorded in order to manipulate the financial position and the profit and loss of the company. Perfectly said by all of you all. Okay. So bogus transaction is dummy only to reduce your P&L or your profits. The company can go into bogus transaction. Again, that is a fraud. Again, manipulation, and it comes under manipulation and alteration of financial statement. Okay, after recording bogus transaction, the next type of manipulation we have is called as window dressing. Along with window dressing, we also have secret reserve. Okay, both these points were considered earlier, so I'm not going to explain that in detail. Window dressing is nothing but representation of accounts in a way that it shows a better position than the actual position. And secret reserve is the opposite one. A worse situation, I mean, a good situation is considered to be as a worse situation. Okay. Again, that comes under fraud. It is illegal. Okay, if you got caught, then there are consequences. Okay, these were the various types of manipulation under the heading fraud. Okay, we have only gone through manipulation. Did everyone understood what is deliberate omission, bogus, and window dressing?
Yes, sir.
Perfect. So now identify the type of fraud. Okay, these are the two transactions noted down. Now again, we have only gone through the first part. So identify the fraud from the first part. We have not gone yet till misappropriation. Okay. If you're once you're finished with the first transaction, okay, do post the answers and let me know. And then we'll try to identify it. Okay, Mehak has given. Mehak has written deliberate bogus, deliberate omission. Okay, okay, a cash sale of 20,000 done by a marketing executive. was not informed by him to his superior. Matlab he sold but he didn't inform it. Matlab he kept it in his own pocket. Okay, so that is a deliberate omission. Yes, it is not bogus. Okay, Mahek, it's not bogus. It's only deliberate omission. It is not bogus. He did actual sale, but he didn't inform the superior. So the entire amount was kept with him only. Okay, so it's deliberate omission. Perfect. Everyone have, I guess, all of you have given the exact and the correct answer. Perfect. Second one, recording of extra depreciation to lower the profit. Yes, it is recording of bogus transactions. Perfect, perfect. So at least this part got cleared by all. Great. So now we jump back to fraud. We are done with manipulation. Next comes misappropriation. Misappropriation can be done. Yeah, Meg, you mentioned both the answers. Achha, okay, both the answers were mentioned together. Okay, okay. Then it is perfect. I thought it was the first answer. Okay, okay. Great. It was both the answers were perfect. Yeah, Steve, you raised your hand.
By Mr.
Okay, okay. Then not an issue. Okay. So now we come to misappropriations. Now under misappropriation, first is misappropriation of cash. Now the word misappropriation means, okay, which is not correctly done. Okay, you are misappropriated. Let's say you got money, you either didn't record it or you recorded less or you completely omitted. Okay, that is called misappropriation of cash. It refers to doing fraud with cash. Okay, when you know indulge into illegal activity relating to cash, then it is called as misappropriation or fraud with cash. Misappropriation of cash ke baad you have misappropriation of goods. That is, it refers to doing fraud with goods, recording of goods, unrecording of goods, keeping the goods for your own use, okay, selling it and without recording it. So all those things are nothing but misappropriation of goods. Okay, so when you indulge into fraud using cash or goods, then it is known as misappropriation of cash or misappropriation of goods. Did everyone get that point? Misappropriation. Examples are there. I'll be giving an example later on, but till now at least all understood. If you do any mistake relating to cash or any fraud relating to goods and cash, it is called as misappropriation of cash and misappropriation of goods. The last point is very, very important. Okay, the word teaming and lading. Can anyone tell me when you know went through this earlier? Can anyone tell me what do you mean by teaming and lading? This word you all have gone through before, right? First, tell me that. Otherwise, then it won't make a point. Teaming and lading. Have you all went through this point earlier?
No, sir.
No. Yes or no? All of you
No,
all I'm
sir.
asking. Okay. Chalo. I'll explain you all first this. I'll explain you all this. This is a very, very, very important type of fraud. Okay, and a type of fraud. Okay. I'll explain you all that with an example. Okay, now take this example directly. Cash received. Okay, let's say you are working in company X or you are Mr. X working in a company. Cash received from a customer. There is one customer called as Rahul. Okay, cash received from a customer, Mr. Rahul, may be used by an employee for his personal use. So let's say Rahul, a customer, gave a payment to the company, let's say rupees 10,000. Now, as your duty, you had to post this amount into the bank account of the company. But you didn't do that. You used it for your own personal use. Rahul, a customer, gave money to the company, but you didn't record in the company's account, but you posted in your own personal account. Now, to hide the same, there's another customer who came, name as Rohan. He also input, he gave rupees 10,000 to be deposited in company's account. So now what you did here is, you didn't record Rohan's account in the books of company. You recorded Rohan's account in the books of Rahul. You get that point? Rahul gave you money, you used it. Someone else gave you money, you put that amount in Rahul's account. So Rahul's account is cleared now. Now Rohan's amount is pending. Now there's another customer called as Kamlesh, okay? Let's say he also is coming with and paying 10,000 to the company. Again, his 10,000, you are not recording into his account, but you are recording into Rohan's account, thereby fulfilling Rohan's account also. Now Kamlesh's amount is still pending. Now in that case, okay, Rahul record his cash received later from Kamlesh as cash received from Rohan and so on. This fraud is done by employee is called as steaming and leading. So one person's amount, okay, you're nullifying that by another person's account, and you keep doing that till the 10,000 which you had taken for personal use. Once you get the 10,000 rupees back, thereafter you'll put that in Kamlesh's account. Okay, that procedure keeps on going out till you don't fulfill, complete the entire transaction. That is known as teaming and leading. Did you get that example?
Yes, sir.
Okay, so it's like, take an example. You're a cashier in the bank. One customer came, he gave you 10,000 rupees. Let's take the best example. Let's say it is Valentine's Day. Okay, think today is the Valentine's Day. Everyone requires hard cash to spend on your beloved. Okay, but unlikely due to COVID and all, your parents haven't given you that particular amount. So basically, you're broke right now. So let's say and you all get a golden opportunity to work in the bank, okay? You all have golden opportunity to work in the bank. You all are broke. Valentine's Day, you need money. There is this one customer who's coming to you. There is this one customer who came to you to deposit 10,000 into the bank, okay? Customer A came to deposit 10,000 into the bank. What you will do, you won't take that money. You won't deposit in his account. You took that for your personal use. When B came and deposited 10,000, you transferred B ka amount. You transferred B ka amount in A ka account mein. When C came and deposited the amount, you transfer C ka amount in B ka account. And you keep on doing that till you don't get 10,000 back and deposit into the final person's account. Okay, that is known as teaming and leading. Sorry. So did everyone get that example? Did everyone understand teaming and leading? What it is? What does it mean actually?
Yes, sir.
Got it. So when one person amount is been nullified by another person amount and another person by a third person, and you keep doing that again and again. Okay, till you don't finally pay it. That is known as teaming and leading. Okay, a very important point. Okay, this is a very important fraud type of fraud. Okay. Because the misappropriation comes to an end. So again, under misappropriation, now we're talking only from misappropriation point. So try to identify what kind of fraud it is given based on the transaction. Okay, everyone done. So we will discuss it. Okay, Mehak has given the answers. First is not recording cash received. No, see, Mehak, you have given the first one, the teaming. Okay, teaming is when you keep doing that continuously. Yeah, they just mentioned that one time the cash has not been recorded. They didn't mention someone else's amount has been recorded. And teaming and leading has that bigger stuff. Okay. Yes, it is misappropriation of cash. Yes, yes, perfect, perfect. Second one, recording only part of goods record, goods received. Sorry. Second one, what kind of misappropriation it is? Yes, it is misappropriation of goods. Perfect. Third one, entering lesser amount in the books. Yes, it is misappropriation of cash. Perfect. Actual theft of cash. Yes, that also is misappropriation of cash. Next is recording excess or dummy sales. Yes, it is. Yeah, it could be both. Okay, it could be bogus also. Yes, dummy transaction as well as misappropriation of goods. So it is bogus as well as misappropriation of goods. And last, actual theft of goods from the warehouse. Yeah, that is misappropriation of goods. Great, perfect, 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 perfect. So then again, the types of fraud, the concept is clearly been done for, you'll have cleared all the doubts based on types of fraud. Okay, great, 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 great. Then we move ahead with the next part. Okay, next, now these are all common points. Okay, so we just read out quickly what are the indicators of errors in fraud. Like how can you come to know okay, there's an error in fraud? Not that important topic, but we need to just cover it. So quickly we'll be covering it up. Okay. Now, what are the various indicators of fraud? Okay. First, domination of one person or a small group in the management. If the most power, if all the power has been entrusted in one single person, all the amount, all the cash power, all the power of relating to cash is, dominated or allotted to only one person, then he has the power to manipulate it. So in that case, there are possibilities of errors and fraud. Absence of internal control. If there is no proper internal control, no proper management, then there are possibility of errors in fraud. High turnover of accounting staff, meaning frequently you keep removing your accounting people and get new people. So there are possibilities of errors and fraud in that also. Frequent changes in auditors and lawyers. If you keep repeating changing your auditors, if you keep changing your lawyers, then there can be a lot possibility of lot of errors and fraud. Inadequate working capital. If you don't have a lot of good amount of money with you, then there are possibility you will go for fraudulent act. No credit sale in spite of risk of bad debts. If you keep selling your products on credit, possibility of lot of frauds and errors. Investing in such product which is subject to obsolescence. So if you are trying to put money in those products which are outdated, again you will be incurring losses in that. So that is again one of the indicators. Next, heavy dependence on few products or customers. So if you only are dependent on one or two customers for your entire business, then a lot of errors and fraud can take place in that. Many transactions near the end of the year affecting the amount. Now, when see in the full year, let's say you don't have many transactions, but at the end of the year, in the month of March, if there are multiple transactions taking place, but there is going to be some fraud taking place because full year you didn't have transaction, only directly at the end of the year when the accounts are going to be transacted, accounts are going to be audited, and then you have multiple errors, multiple transaction taking place. Incomplete, inadequate record, untallied trial balance, untallied. Okay, so if you have all the incomplete accounts, incomplete, books of recording or recorded transactions are incomplete and your trial balance, if they don't tally, it means there are some errors which have taken place, or there are some frauds which have considered to be taking place in that organization. Next, excessive payment for services. Cost was only 10,000. You have shown 50,000 excess payments. So if you have excess payment, it means there are some fraud taking place there. Non-availability of vouchers. Bills are missing. Amount is shown, but bills are missing, meaning there is some error of fraud taking place there. Last, vouchers not properly authorized. Vouchers, they don't have date, they don't have stamp, they don't have sign. So again, it means there are some errors being committed on that particular note. Okay, these were various indicators of errors and fraud. Did everyone get that point? Now, these are basic common, points. Okay, so if anyone have any doubt in this, can ask, or I'll move ahead then. Let me know if anyone have any doubt. Or should I move to the next slide? Okay, great. I'll move then. Since I didn't, yes, okay, great. I'll go ahead. The last topic, now the last topic under second chapter, that was error and fraud, is what is the auditor's responsibility towards errors and fraud? If the auditor comes across some error or the auditor comes across any fraud, okay, then what is the responsibility of the auditor? Number one, the prime responsibility of management. It is the prime responsibility of the management to detect and prevent errors and fraud. So the main auditor responsibility, before that, it is the management's responsibility. It is stated that the errors and fraud are detected first by the management. They should see that. It is the management which has to develop good accounting system, adequate internal control system to prevent errors and fraud. So the auditor's rule states that before the auditor finds out error and fraud, the management should first find the errors and fraud. Thereafter, the auditor will see the errors and fraud. That's the first point. Second, incidental or secondary objectives of audit. The primary objective of audit is to report whether the books are true and fair. The detection and prevention of error and fraud is incidental or secondary objective. The auditor's responsibility here is to plan and perform the audit in such a manner that the accounts are free from errors and fraud. That is the major responsibility of the auditor. Next, probability of non-detection of errors and fraud. Now, see, again, auditor is a human. Human have error-making tendency. So it is always possible that some errors and fraud may remain undetected even after the audit. This does not mean that the auditor has failed to perform his duties. The auditor is not responsible so long as he has taken reasonable care and followed general principle of auditing. That is what I said. Auditors will never come into the picture if anything wrong happens. Auditor will directly say, whatever documents they provided me, I checked that and they were all perfect. Whatever errors and fraud were there in other documents that were not shown to me, I have nothing to do with that. So this is another responsibility of the auditor. Next, indicators of errors and fraud. If auditor observes any indicator of error and fraud in the books, he should take necessary steps to detect and prevent. If the error is confirmed, it should be rectified. If fraud is detected, it should be reported to the owners. Very important point. If there is error, rectify it. If there is fraud, report it. Last point, CARO 2016. Very important point. What do you mean by CARO? CARO, the full form is Companies Auditor Report Order. So in case of a company, a CARO report requires reporting of errors and fraud, if any, found in the books. It also requires reporting of nature and amount involved. So if there is any error and fraud committed, then the auditor has to make a Caro report in which he has to mention what is the nature of the error and fraud and what is the amount involved in that error and fraud. So did everyone get that? Get those points? What are the auditor's responsibility? Did everyone get these points?
Yes.
Yes.
Okay, ठीक है, चलो. So with this, your first module का second chapter also comes to an end. So now we the third chapter, that's the last chapter, that is, we have a topic called as types of audit. You all must have gone through this topic before. Let me know if you all have gone through this before. Yes or no, all of you? This topic was done before, right? Types of audit. Great. So then it become very simple. Okay, then it will become good. So you can give me the answers when I ask you. Chalo. Now, your types of audit has been divided in three parts. Okay, first, audit on the basis of authority, on the basis of rules and regulations. Okay, under that, the very first type of audit is called as statutory audit. Now, what is statutory audit? A statutory audit is an audit which is compulsory under a particular statute. Statute means any law. Okay, under particular law, if the law says you have to do audit, it is called as statutory audit. The provision for conducting of the audit are prescribed in the statute. Okay, so how to conduct the audit, what to do in the audit, everything should be mentioned in that law. That is known as statutory audit. Some organizations which require audit under the law are company registered under the Governance of Company Act 2013. So if your company is registered under the Company Act, you have to do statutory audit. Banking companies governed by Banking Regulation Act. If you are a bank and if you are regulating as per the Banking Regulation Act, you have to perform statutory audit. Insurance company governed by Insurance Act, statutory audit. Local authority, government undertaking and department, anything related to government, statutory audit. All business organization having annual sales over 40 lakhs, statutory audit. So any audit which is compulsory according to some law, it is known as statutory audit. Again, a company whose turnover is more than 40 lakhs, statutory audit. Now, under statutory audit, there are few features which we need to remember. First, statutory audit is compulsory under some law. The auditor qualified to be appointed as an auditor should always be a chartered accountant. Next, appointment of auditor is made as per the law. Okay, individual board of director cannot appoint. It is appointed by the law. It is always a complete audit, full and final audit. The scope of audit is determined. Okay, how much to audit, what to audit, everything should be mentioned in the law governing that particular audit. This is known as statutory audit. That is the first type of audit on the basis of authority. So we have statutory. The second, now we jump to the second type. Second is called as non-statutory audit. Exact opposite. It is audit of small enterprises. Okay, statutory, non-statutory meaning that audit which is not compulsory. It is done based on according to the need of the enterprise. Okay, like the first type of enterprise, we have the audit of small enterprises, that is sole traders and all. Audit of small enterprises generally voluntary. It is based on the the owners. If they want to do, they do. If they don't, they don't. Small enterprise includes sole traders, partnership, joint into family, etc. What are the features of audit of small enterprise? Number one, the scope. Okay, since the audit is not compulsory, the scope is determined by the owner. Owner himself will decide what to audit and what not to audit. Errors and fraud. Since the scope is decided by the proprietor, there are chances of error and fraud. He will decide what he wants to show and he doesn't want to show. Next, audit evidence. The books of account may not be kept properly under, therefore documentary evidence may not be available. Okay, there won't be proper documents available. So evidence is also bad in that case. Audit planning. Planning of audit work is very simple as there are limited and similar transactions. Okay, the person will be doing only small business. So not too many transactions, not too many, headache. Planning can be done very easily. That is audit of small partnership or small enterprise. Now we jump on to, okay, there was one more point, audit sampling. Auditor may check all or maximum number of transaction as the size of the business is small. See, if it's a small business, the maximum transaction that you will be having in a month will be, let's say, 1,000, 2,000 transaction. But if you're a big company like a Reliance or a Tata, you have millions of transactions there. So here it becomes very simple to check each and every transaction. This was audit of small enterprise. Next, we have audit of partnership firm under non-statutory. Okay. Audit of partnership firm is, since partnership is also a small enterprise, the procedure of audit of small enterprises is to be applicable to it also. The same, whatever is done in, sole trader, the same activities have to be performed under partnership firm also. Features, auditors should check the partnership deed because it contains the capital contribution, PSR and all those things. Second, the appointment. The auditor should see that the appointment is as per the provision mentioned in the deed. And last, minute book. Auditor should verify that proper minute book is maintained for the meeting of the partners. This was, the second type of audit under authority. First one was statutory. Second is non-statutory, which is not compulsory. Third one, we have internal audit. Okay. Now, what is internal audit? Internal audit is a review of operations and record, sometimes continuously undertaken within a business by specially designed staff. If you have a big company, okay, you have a separate department called as an account department. Under that accounts department, you will figure out few people and you'll give them a separate task that will be to keep auditing the accounts department. That is known as internal audit. Features it is normally done by the employees of the organization. It is a part of internal control. It is a critical review of your internal control system. And it is continuous in nature. It keeps on happening again and again on daily basis. Did everyone understand audit on the basis of authority? We had first statutory, which is compulsory, non-statutory, voluntary, and internal, which is internal of your management. Okay, internal audit of the management. Did everyone understand the audit on the basis of authority? Yes or no? Everyone, I know everyone are hungry and it's already very hot. It is boiling hot, but yeah, just stay with me for another 10 odd minutes. Okay, great. I know it is difficult, yeah, because it's constant theory, okay, but I'm trying my best to put some wherever possible, put some practical stuff so at least you all can interact. Okay. So I assume that everyone have understood audit on the basis of authority. That is the first type of audit. Now the second type of audit, we have audit on the basis of scope. On the basis of scope, we have two types of audit. Number one, complete audit. Now what do you mean by complete audit? In complete audit, auditor is required to check each and every transaction recorded in the books of account. So complete audit means even if there are 1 million transactions done, each and every transaction will be checked. That is called as complete audit. The auditor has to check each and every voucher document relating to the transaction. So even if it is a 1 rupee transaction or a 1,000 rupee transaction or a 1 lakh rupee transaction, each and every transaction, each and every voucher will be checked under complete audit. This type of audit may be suitable for only small organization, but not possible in case of large organization. But obvious, if you have 1 million transactions, you cannot go for complete audit. Okay, but if you're a small organization, a small kirana store or something like that, then you can go for a small, for a complete audit. So under audit on the basis of scope, the first type was complete audit. Second, partial audit. In this type of audit, the auditor is not required to check each and every transaction. He may take, of the transaction, he may take few of the transaction, there's a missing word. He may take few of the transactions and then check them. Okay, something called as probability. You all have learned that in maths earlier. Okay, probability. So if I have, let's say, 100 bills to check, I will check, I will keep a percentage. I will say I'll only check 30% of that. So out of 100 bills, only 30 bills will be checked. That is known as partial audit. Next, the auditor has to state the area covered by the audit. So he has to decide, he has to state the out of 100 bills, only bills which are more than 10,000 rupees, only that will be checked. So that is how he can state the area covered by the audit. And last, this type of audit is not possible in case of statutory audit. Okay, statutory is compulsory audit. So if you are doing a compulsory audit, you have to check each and every document. Okay, but if you're a non-statutory or internal audit, then it can be done, partially also. These were the two types of audit on the basis of scope: complete audit and partial audit. Okay, did everyone get these 2 points?
Yes,
Yes,
sir.
sir.
Okay, now
Yes,
one
sir.
last. Now we are just coming to the last part of the lecture and the last part of the module. Audit on the basis of time. Based on time, okay. The very first time. Achha, no, I don't know in the next week what will be the lectures or no, because I'll have to ask the ma'am, because she only told me for these this week I have these 2 lectures. So I don't know. Did ma'am informed all how my lectures are going to be? If the CR has any idea about it?
No, sir.
So after every module Rachna ma'am finishes, you will be taking a lecture, sir.
Okay, so
You'll
it
be
will be
giving us
after
a
every module, right?
yes, sir. You will be giving us a quick revision of the module.
Okay, great. Chalega. Okay. So that's the reason I have no idea about the next week. So ma'am had given me 2 lectures. So that's the reason I was just in a bit of rush today, because a lot of things were to cover. Okay, now we only have just 2 more slides, so that's okay. So great. Acha, one more thing. Till now, just both the lectures. Okay, did you all, at least understood a bit from my lecture? The first module.
Yes,
Yes,
sir.
sir.
Yes, sir.
Okay, great. So about the notes, okay, I'll do that. I'll upload the note also in this week, by the end of this week. So you all can start preparing also. And in the next week, I'll also
Yes.
say that for the objectives and where, and also I'll be uploading all that. Okay, so you don't have to worry about that. So first, let me just complete this last part. I know everyone are very hungry. If not all, at least I am. So we'll just complete and finish the last part. So audit on the basis of time. The very first on the basis of time, on the very first part is, it is called as continuous audit. As the name suggests, okay, continuous meaning after every interval you are going to do auditing. So what does it include? Generally, audit begins when accounting ends. Okay, when you finish noting down all your accounting details, from that audit begins. After that, only audit begins. But the full year you are doing your accounting. At the end of the call the auditor and try to audit your accounting statement. But in case of continuous audit, work is carried out during the accounting period with some interval, every month, every week, every quarterly, every half yearly. Okay, within the same year, you will keep doing auditing. It is done basically by those companies which are huge in size. At the end of the year, to do all your transaction, to record all your transaction is very difficult. So after every short interval, let's say 1 week, 1 month, the auditor will come and keep checking the accounts and auditing the accounts. The accounting and auditing is done simultaneously. The auditor visits the office of the client at regular interval and does the work of audit. The interval may be 2 or more months. Okay, at each visit, the work would be taken up from where it was left in the earlier visit. So in the first month, whatever has been recorded will be kept as recorded. In the next month, when the auditor comes, he will start from that same point where he recorded last. From there, he will continue recording the other transactions. This is known as continuous audit. Next, we have final or periodic or annual audit. Okay, now as the name suggests, audit conducted after the end of the accounting year is called final audit or periodic audit or annual audit. It is known as periodic or annual. The audit work begins after the accounting year is over. So after the previous year gets completed, the books of accounts are balanced, closed and complete. Only then your audit procedure starts. Unlike continuous audit, the auditor visits the office of the client only once, that is at the end of the accounting year. And last, he has to check all the books at that time. He may not check each and every transaction and may resort to test check. Test check means probability. Out of 100, I will only check 30. That is known as test checking. Okay, that was the second type of audit based on time. First one was continuous audit. Second is periodic, that is only once in the year. Continuous is on continuous basis. Third is interim audit. Interim matlab between two final audit you have a interim audit, a middle audit. Audit conducted between two annual audit is called interim audit. So between two annual audit, if you have one audit in between them, it is called as interim audit. It is generally conducted to find out interim profit in between the year, what is your profit, and to know your financial position of the company at the end of a certain point of time. Interim audit is conducted in the following circumstances. Number one, publication of quarterly result. If there is a company after every quarter it publishes its result, then you have to go for interim audit. If you have to provide interim dividend, okay, then you have to go for interim audit. If you are going to sell, you want to acquire or sell your business, then you have to do interim audit. And last, changes in the firm. If there are going to be some changes in the firm, like a new partner is getting admitted, or there is a partner getting retired, or death of a partner. Okay, I'm talking about a firm. So that's the reason you'll have to do an interim audit. So first one was continuous, that is after every interval. Then was annual, once in a year. Interim, within two annual, we have one interim audit, that is in between the two annual audit. And the last part, the last topic, concurrent audit. It means audit conducted concurrently or continuously as transactions takes place. So the moment you sell, moment you generate a bill, on the spot you record it. That is called concurrent audit. Okay, the moment you make a bill, you record it. It is generally to be performed by the banks. The moment someone deposits the money, the moment the money goes out, on the spot recording will be done. It cannot be done for future date, so it has to be done on the spot. It is conducted to verify errors and fraud in transaction within the shortest possible time. So the banking hours are, let's say, morning 9 to 1 or 1 or 2. After that, the banks will put down their shutters, and within the bank, all the recording of the transaction will take place. This ensures early detection of errors and fraud if there are any. Next, the internal staff is allowed to do the audit, but he should not be involved in the operation. if you had, posted, if you have collected money, or if you are sitting at the counter of recording, someone else from your department come and sit and check, but you cannot check the account. Next, even the external auditor can be appointed for concurrent audit. You can give someone outside person also. And last point, RBI will give you guidelines for conducting of concurrent audit. Okay, so with this, audit on the basis of time also comes to an end. We started off with statutory, non-statutory, internal. Thereafter, we went complete and partial. And lastly, we came to continuous, final. The third one was interim, and thereafter concurrent audit. With this, the topic related to type of audit comes to an end. And with this, the chapter, your very first module, also comes to an end. I hope everyone understood the first module very well.
Yes, sir.
Yeah.
Yes,
Yes.
sir.
Thank you all to listen. I'll have to thank you to listen, because theory chapter, if it would be an accounts or something else, okay, the time goes out very fast because we need to keep solving it. But since it's a theory topic, okay, I hope I tried my best to clear all your doubts. Okay. So with this, our module comes to an end. Okay, I'll be updating you all when I'll be uploading the notes and all, and we'll meet soon. Once the second module will get done, I'll meet soon. Okay, so take care and take care and keep good health.
Thank you, sir.
Thank you,
Welcome,
sir.
and I guess we have exactly done on the point. It's 1:10 and
Thank you,
lecture
sir.
is completed on time. Yeah. Thank you very much. Take care.